This is our Forex blog for November 22nd, 2011. And like we do most days, we really want to buy the strongest currencies and sell the weakest. The euro is usually the one that's on the top of all the other pairs. The yen's on the bottom. So if you have a strong euro today, you want to buy that against either the Australian, the New Zealand, the CAD, and we show the bar by bar statistical strength of each one in histogram form on the top. This is made up of 5 different statistical trend tools. 3 of them measure the direction, what percentage of dollar pairs are going up or down, and 2 of the other ones measure the short-term bar-by-bar intensity of that move up or down and the intermediate intensity. So anytime you have a plus 80 strength, it means the vast majority, 80 to 100% of dollar pairs are going up, and they're doing so with a lot of intensity, which means that trend's likely to continue. If you see a lot of weakness come in followed by less strength, then the previous weakness is likely to continue. But keep in mind, underneath that, we have the daily, weekly, and monthly trend. The dollar is in a very strong uptrend, so that if you see a pattern like this with a lot of weakness followed by very little strength or less strength, a third less to half less visually, then that weakness is likely to continue. But because the weekly, monthly trend's up, usually that weakness is only going to continue for about an hour or two, typically, when that's exactly what happened here. You had some strength come in, and you don't know if this strength is going to continue or not, but guess what? The weakness comes back in again. That intensity, the weakness is more than the strength. And, if the dollar's up 2, 3, 4 days, 5 days in a row, you're going to have days where it's weak for 4 or 5 hours, even though the longer term trend is up. So it's always good to look at the daily chart. If you see a currency that's up 3, 4, or 5 days, and then weakness comes into it, it's very safe, very high probability to trade it in the opposite counter trend direction. But anytime you have currency that is extremely weak like this, where the weekly, monthly, and the daily trend's down, then it's very much higher probability trade. Same thing with the Australian here. A lot of weakness followed by almost no strength. A lot of weakness followed by no strength. It's in the direction of a longer term trend. It's pretty much a no-brainer. So today, some of the best high probability trades were buying the Euro Australian, buying the Euro New Zealand, buying the Euro CAD after 3 o'clock when the intensity, finally kicked up. These are currencies that I don't typically leave running. So we're going to bring them up and just take a look at the charts using this. And as you can see, after 2 o'clock here, when the euro started to become strong, this one continued on up another 50 pips. And there's a couple entry methods that you can use: pullbacks and sideways consolidations. Here you had a higher high, but it didn't take out this high here. You don't have a really a confirmed uptrend until that higher high gets taken out. But using the currency meter, it was pretty clear that the euro was going to go up, the Australian was weak, and so when the market goes sideways for 2 hours and breaks out, it's very likely to go up. You draw your fibs on the last big wave, and it gives you a great profit target, as you can see here. Once it goes up to that level, you can draw your fibs on the whole area. And after a currency moves, I think 50 to 100 pips, you're typically going to want a little bit deeper pullback. Wait at least 15 to 25 pips. In this case, it pulled back about 10, 20, 30 pips. And the second entry method we use, other than a sideways rectangle consolidation, is a pullback. And we just draw trend lines over those bars high. This one came within a few pips of the 50% fib, which is, in my opinion, the highest probability buy. It's also the whole number, which tends to be support, tends to have buy orders there. It stopped at the area where it normally does, and that tells you that there were buy orders there. So when it broke that trend line, you got in, and it comes back up to the high installs. I would have been out of this trade probably right here at 37.31 for a nice 30 plus pip profit. You risk 10 pips to make 30, and with that kind of ratio, you don't even have to be right half the time to make money. Let's look at the Euro New Zealand. Also very strong trend up, even more so than the Australian. And this one pulled back and kind of went sideways here. Usually you want to wait for a half an hour pullback before it breaks out and you get in. And this just takes off. And again, the fib targets make an excellent place to get out of your trade. If it goes through the first one, about 80% of the time it will stall at the second one and then pull back. You don't know if this pullback is going to keep going down, or in this case, stall and keep going up. But most of the time, the 1.618 fib target, probably 80-85% of the time, is going to be the maximum you're going to make in that. Now, if you use a trailing stop in this, more than likely your trailing stop would have got you hit here, and you could have got out of this trade somewhere up here at 81.03 versus maybe you would have possibly given back 10 to 15 pips if you let your trailing stop get hit. We also see that the CAD was very weak here at 3. There were no signs that that weakness was going to stop until right here around 8:30. And so as long as the last momentum move had a lot of intensity and the counter trend moves don't have that much intensity in the opposite direction, you want to look to sell it in this case. So EuroCAD is also a very high probability one. And guess what? After that 8:30 right here, where there's a lot of strength coming in, that turns the downtrend into an uptrend, and that's why it fell so much after that. But starting at 3 o'clock, when there was a lot of weakness right here in the CAD, the euro was already strong. It just continued. The only really high probability trade, because this one was one of them that just took off and kept going, there was really no pullback, was this one right here, and it only went up about 10 pips. So this is the worst example of the bunch. Now again, the euro was strong. The dollar and the yen were weak, but they both had longer-term weekly and monthly trends that were up. So if you had your choice to choose between the two, I would pick the yen because the yen's daily trend shifted down last night, whereas the dollars didn't. If you ever have your choice between two currencies, trade the one that has the most of the colors going in the same direction. So right here, there's a lot of weakness. Only 15 minutes of strength, only 5 minutes with intense strength. Right here at 1, that strength went weak again. The 2 o'clock in the morning was when the euro got strong. So really after 2, the euro yen was a good one to look to buy. Let's move this out of the way here. Here's a 5-minute euro yen chart after 2 o'clock. This one continued up. You got this little pullback trade right here, and you can see it continued another 30 pips up. The yen was no longer weak after that, unfortunately. So that's why you want to look at the currency meter. Once you see extreme strength coming back in the direction of the longer term trend, it's no longer weak. You can't keep looking for buys in the euro yen. Anytime strength comes in and the longer term trend is up, you have to assume that that strength is going to continue. But in the dollar, you have a lot higher odds later in the day than trading the euro against than the yen. The Swiss was also extremely strong today, so there's a lot of good trades to be had with that. Selling the Australian Swiss straight down. And this is what I mean by, this is a perfect example of a sideways rectangle pattern. When one currency is weak and the other one's strong, you kind of have a descending top wedge pattern right here. It breaks down, and again, the fib profit target is an excellent place to get out of the trade. Notice it did stop at the 1.618. Like I said before, and I'll repeat, in my experience, about 80% of the time, this is the maximum move before getting some kind of a pullback. So if you're going to use a trailing stop, it's better to get out at the 1.618, at least half of your trade, rather than give back 10 to 25 pips when your trailing stop gets hit. The bigger the previous swing, the more likely the 1.618 is going to get hit. I almost never draw fibs on moves less than 25 pips. If you get a little tiny 10 or 15 pip move, then the Fibonacci profit targets are pretty much worthless. They might work randomly every once in a while, but the bigger the move, I would say keep it simple, 30 pips. And in this case, it moved just about 30 pips. They tend to work very well. The farther down a currency moves, the less likely it is to get hit with the 1.618 fib. So in other words, this move right here is a little bit bigger than the previous one. Let me redraw that off this high right here. And the market wasn't even able to get down there. The bigger the move, this one, let's see how many waves down it has. This has already gone down a lot, went down a lot yesterday, went down even more, pulled back here. So this is really extended to the downside. If you don't, you can hit the plus and minus keys to zoom in and out. If you don't look at what the currency has done before and you just look at this, you don't know if it's the first day it's starting to go down or after a 4 or 5 day down move. It's very critical knowing that. So last but not least, let's look at the New Zealand Swiss. Again, another excellent, very high probability trade. This one's also, going sideways right here. The New Zealand was weak even before midnight here, and so therefore you're looking to sell this move here. I like at least a half an hour to 2 hour sideways range. So if you shorted right here, where you stop a few pips above the high, you had to sit through kind of a little bit of a drawback, less than 10 pips, nothing to even be nervous about, and then it finally went your way. And again, it's always safe to look and zoom out to get an idea of where the next potential profit target level is. Look where it went, almost to a pip of the 1.382 of this move. Again, the bigger the move of the fib or the swing, the more likely the first fib target is to be the maximum low. And you always want to draw multiple ones on there. Sometimes you have Fibonacci cluster areas. Notice the 1.618 acted as support right here. 68.21. There's no reason why 68.21 was an area where there was heavy buying other than the fact that it was a Fibonacci profit target. This is another good example that Fibonacci areas work. Some people out there are total idiots and they think they don't work. Fibonacci's are amazing. That's why we use them, in addition to the tools that we created ourselves.